So good evening all. Good to see you. Energy Finance class gathering for the last session. This is a small presentation I thought of taking more inputs from the class and Professor Parker. That's the idea. So Exxon case was quite interesting. Being a finance guy, the valuations, the swap ratios, cash purchase, equity swaps, and so on, they're quite exciting to me always. So Exxon, it was in the news because many analysts felt when it was in the market players' minds in the month of April or first week or second week, till the time there was no movement in the stock prices of these two companies, Exxon and Pioneer. But in the first week of April, slowly people started discounting this information that many people said that it was a rumor, but it was finalized in the month of October. Till then it was a rumor and the prices were volatile in that period. So I think you all are aware, but a bit of information on this. Exxon is one of the leading oil producers and refiners with the greatest amount of distribution at a full price retail. As Professor Parker was saying, they don't care about hedging. They never care. They just bring out the product and sell it out, and they ensure that the product is ready to sell. That is the business model they always had. So they are instantaneous in dealing with oil. The acquisition news, it came first in the market in the second week of April this year, and it was finalized on 8th of October by the respective company's executives. And the offer deal value was confirmed at close to 60 billion, exactly $59.5 billion worth. And these calculations made the offer as 22% premium compared to Pioneer's market capitalization around 49 billions in the market. Capitalization is all about the stock market price times the number of shares issued. This is 7.5 times of Pioneer's returns to shareholders. So the question is, there were a lot of debates on this. Is this a good deal or not? In the industry's point of view and prices point of view, because there are crazy things happening. So in industry point of view, small players love to be sold because everyone, we are talking about carbon footprints and so on. So electric vehicles coming into the picture and alternate energy sources like wind projects and coming in. So maybe in the few decades, oil and natural gas industry is a big question mark for many analysts. So at this time, for $60 billion, Exxon wanted to buy Pioneer. So this was a big surprise to many analysts. So from big players' point of view, to look to bulk up, they look forward to bulk up, diversify, cut costs from merger synergies, including Exxon. So that supports in industry point of view. And in prices point of view, oil and gas prices have remained relatively strong on NYMEX, which is the result of current supply and demand imbalances globally, including the Ukraine war. And Brent crude prices started rising, and it reached a high of $90.89 on the month of October on 13th. Same is the case with natural gas. It rose to 3.382 on 10th October in the same month, which is the high. So looking at this, it is a good idea to acquire as the oil and gas prices are relatively strong and leaves the scope for future hike or volatility in the coming months or years. So what's the reason for the Exxon timing right now? Given the industry setting, which I explained in the previous slide, the current scenario in national and global markets where oil industry have a big threat of alternative sources, seen through the success of EVs and alternative sources to oil and gas, like wind energy products I was mentioning. Then what we can look at is the synergies that the post-deal valuation gives to both Exxon, including Pioneer, after the merger. So Exxon is the largest, this makes largest and biggest player in the region, leaving Occidental Petroleum behind. And this would help ExxonMobil boost its global inventory. That is a strategical move by Exxon, and build a dominant position in the Permian Basin oil. Then Exxon is not into hedging, risk management, price risk management of oil and natural gases, and where Pioneer is good in that. So that is a good synergy for Exxon. Then in Pioneer's point of view, it has deep low-cost inventory, which is the third largest after Chevron and ConocoPhillips. And I think looking at all these things, Exxon may be interested in investing in the Permian Basin, which it was looking into it earlier years also. But there is still a significant portion of the Permian that remains unexplored, in spite of some negativity on those regions. So I'm not exactly sure which way they are located. This is the Pioneer's contiguous high quality acreage enhances the assets where it is located. ExxonMobil's Permian position. This is in Delaware Basin and Midland Basin. I got it in I think Pioneer website itself. Then in financials, it is said that Exxon is overvalued. It has a premium, and this deal, which is said to be 20% premium, this deal will offset where Exxon had a premium in the market. That is not a big loss to market valuation or capitalization of Exxon. And it's also possible for Exxon to purchase Pioneer for cash. Pioneer currently has a 51 billion market cap, and Exxon earned 55.7 billion in net income. So it's not a big deal for Exxon. So the premium is also justified in terms of operational issues, financial and risk areas. In the operational areas, it had huge assets of 850,000 net acres of land and industrial-led acreage quality, Pioneer. Then inventory, I think I already mentioned in the about the Permian shale, where Pioneer is strong in. Then Pioneer was known for its efficiency. The oil-weighted production generates strong margins through high realized pricing. Then scaling up the operation is an opportunity for Exxon through Pioneer's presence. Then in terms of supply chain, Pioneer sets high expectations for employees and contractors to perform their jobs in a safe manner and maintain industry-leading sustainable development and environmental stewardship efforts. So these are the synergies or advantages Exxon may get through this acquisition, which are operational dimensions. Then financially, it is known for stable and growing base dividends with the flexibility in variable dividends, and it had a share repurchase to an amount of 7.9 billion in 2022. I think in one of the sessions of when we are talking about Pioneer, the cash position has come down, and stock repurchase could be the reason for Pioneer. Then the returns, apart from 2020 financial year, the cumulative total returns from 17 to 22 were growing and at par with the oil and natural gas industry reflected through the indices, that is S&P, ONG, NP index. Then the debt has come down, interest has come down, debt services have come down. Then this brings a lot of flexibility because of decrease in the debt and interest rates. It brings a lot of flexibility financially. That's the greatest advantage. Then I think Pioneer is the master of risk management. It hedges a lot. It is known for hedging. So that is the greatest advantage for ExxonMobil. Some negativities on this. It may become riskier in terms of the prices and regional players' performance. I think that is not in the hands of either Pioneer or Exxon. It is led to the market with the global developments. There is a huge downside risk of the oil and natural gas prices fall further in the coming years. That is a prediction, expectation. And it is reported that late last year and into this year, various shale players have reported lower efficiency in the Permian, with many producers missing production targets. This may hit Exxon if it happens with Pioneer 2 as a shale player in the coming years or quarters. And I just did a comparative analysis of the stock prices when there was no news. How was the stock price before the rumor or the expectations? How was the stock price? And when the deal was announced in the month of October, how was the stock price and how much is the current price? So I think if you check the prices, there was no big deviation from the stock prices before the deal was announced. And when the deal got closed and everything got settled, you can see Exxon was 104.59, which was the lowest in the last week of March, and its current price is also around 104. Then Pioneer price is around 236. It is almost the same right now. So in between, it went to a high of 251 when the deal got confirmed. And before the deal got confirmed, Exxon price has gone up to 119. So I conclude that with the absence of corporate culture conflicts between Exxon and Pioneer, which happens with any kind of acquisition deals in mergers or acquisitions, and with other internal aspect of operational, financial, and human resources dimensions, the deal is good if all the synergies and strategies pay off as discussed in the previous slides. It's all about the market regulations and global uncertainties to decide the success or failure of this acquisition, which are beyond the control of Exxon. So let's wish good for Exxon. That's all we can do right now.
So that's great. I think that one of the things you touched on that I think is really going to help them in this. First of all, you were right. The prices have gone down on oil, and Exxon is extraordinarily oily. So you saw their stock prices back down to 103 or whatever, which I think is a pretty good point. The one thing that will help Pioneer a lot is in that vertical integration, Exxon is going to be able to help them sell their gas better. So even if they don't hedge, they're just going to get a better price. Mm-hmm. The other side of it, I think, is there are a ton of synergies that Exxon brings with being a worldwide conglomerate that you brought out. And I think it's there. But one thing we've got to be careful of, right, is, we talked about Pioneer at 6 something, natural gas. Then last year it was like $3.30 something. And now I think today we talked about it at $2.75 or whatever, but because Exxon is such a behemoth, let's say, they can afford to be a little bit patient, right? They don't have to go. Pioneer had to keep producing all the time. They had to keep spending on CapEx, keep going. Exxon can say, hey, we're making a lot of money in our oil. Let's sit here and wait a little bit on the natural gas. We don't have to do this. We're a more diversified company, right? And so the one thing I think that both of you pointed out was their production levels kept going up and up and up.
Yeah.
Well, Exxon might make the oil stuff keep going up and put the brakes a little bit on the natural gas. And that would be something that would be optimal. Great job. Thank you.
Thank you.